podcasting from a remote location somewhere deep in the heart of New York City. This is Crypto Characters, and I'm your host, Jason Nagi. Our guest for today is Susan Joseph. Susan is a JD MBA and former general counsel. She's been consulting in blockchain and fintech for the past 5 years in areas like consortia, insurance, identity, financial services, regulatory impact, supply chain, and humanitarian concerns. She's also co-founder and executive director of the Diversity in Blockchain, Inc., a frequent speaker on blockchain to industry groups, including the ABI, the American Bar Association, right,
American
Susan?
Bar and PLI,
right.
yeah.
PLI, right, that's the Practicing Law Institute, and she's been a guest lecturer at Cornell, Stanford, MIT, and Cleveland Marshall Law School, among others. Susan, welcome to the podcast.
Thank you, Jason. It's great to be here.
Okay, so we're going to talk about, I think we have 4 topics on the board today, right? We're going to talk about insurance, risk and asset side. We're going to talk about enterprise in the crypto winter, enterprise solutions in the crypto winter, smart contracts, digital due diligence, and we're also going to talk about diversity in blockchain, which is going to be a hotly contested topic, right? So let's talk about how you got in to this wild space 5 years ago.
Okay, happy to. So I literally showed up to a conference, and I had just been a general counsel both at an alt-fi doing alternative lending and also at a receivables insurer. And I understood that technology was going to move things forward, so I went to a conference, probably the first consensus conference on blockchain. And it literally hit me like a ton of bricks, which is something that I see often for people, that it either hits them like a ton of bricks or they work really hard and they get to some understanding of it. And I thought, wow, I just ran a good part of a business that was ledger-based. We're talking about ledger solutions that have embedded protocols in them. How perfect is this to try and take out some friction and possibly create opportunities for new business lines?
So when you say ledger-based business that you were in, what are you talking about?
I'm talking about things that kind of look like they're going to be entered onto a spreadsheet.
Okay. And what area was that business in?
Well, that would have been insurance, where a lot of things are experientially done via spreadsheets. You have a risk side, an underwriting side, you have an actuarial side, you have a claim side, you have a premium side, you have all different sides of the business on the risk side, and you also have an asset management side of the business, which is like in some senses, like any other asset management side. Sometimes they've got derivative trading desks, sometimes they have collateral management, well, a lot of times they have reinsurance attached to them, all things that you track via a ledger.
Okay, so you said a lot of stuff. I couldn't write all that down. You were saying it so fast, which is great. But actually, I'd love to hear, and pull that mic just about a couple inches closer to you.
Sure.
There you go. And here, I'll help you with that. Hold on.
Okay, great.
Just like that, and you can move it up and down if you need to, but the idea is just I want your sound to be real good, okay? Mm-hmm. Okay. Even though this is on YouTube, it's going to be on a podcast too, which is why we have these ridiculous mics, right? Okay, so let's talk about all the different things that the insurance industry did, because when I think of insurance, I don't really think of derivatives trading. I know that it's there, or derivatives. I mean, granted, a derivative is an insurance product because you're trying to hedge risk, but I always think about life insurance, car insurance, that kind of stuff. So why don't you talk a little bit about I don't know if they're called verticals, but whatever you call them, the different lines of business in the insurance world, and maybe we can correlate those to kind of blockchain. I think that'd be really interesting.
Okay, so in insurance, you generally either have property and casualty insurance or life insurance. And those two are different types of lines of business. Mm-hmm. You may have an insurer offering all of them. For instance, they may offer life insurance and auto insurance, whatever. But those are different lines of business with different types of concerns. You know, then life insurance is a long tail risk, meaning you take that for somebody's life. It's not uncommon within a life insurer for them to hold on to policies for a long period of time. Personal example, when my dad passed away a few years ago, we discovered a policy that had been in existence for quite a number of years. And, at that point you had to try and figure out where that insurer had been merged to figure out where to make the claim. So that's what I call like a long tail risk. auto insurance you're familiar with. That's something that...
So what does long tail risk mean?
Meaning long tail, the insurer's holding on to the liability, the payout period for a long period of time. They're taking that premium in, but the payout doesn't come until the person dies.
Can a long tail policy be something that you pay on a monthly basis, or is it just you paid it once and you get it?
Well, you generally, for life insurance, you pay each year that you're going to get it. So,
Gotcha.
but they're holding on to those policies. I mean, there are different varieties. You could have had a whole life policy. There are a lot of different pricing types that have been in existence over the years.
Okay.
But the point is that those are longer risks, and the claim, it's not like you're turning that over every year. You're not buying a policy for the person to die that year, as opposed to you're buying an auto policy.
That depends, right?
We hope not. We hope not. But if you're buying an auto policy, then you're going to buy an auto policy every year.
Right.
So
Okay.
you know that you're marketing that in a different way, and you're holding on to the asset in a different way.
Okay, so that's the insurance policies that we all know. I guess I understand how that's ledger based, right? You have to put down.
You put
Who
down a
owns what,
premium,
the
you own
policy.
one, right?
Yeah. So let's talk about the non-obvious insurance products. I want to kind of hear about those and how they work.
You mean on the asset side? Or, well, there isn't, I wouldn't call it necessarily non-obvious. I would say where I'm seeing innovation within the blockchain space for insurance might be on things that are what you would call on-demand insurance or parametric insurance, where there are particular parameters that are met and the insurance is automatically paid out. So the most typical example would be flight insurance, flight delay insurance.
Right.
So
Which I don't know anyone that gets it unless you're getting sick a lot, because you can't cancel for business reasons for most of the policies.
but this isn't for your delay. This is if the flight is delayed.
Ah, okay. All right.
So that's what Ether Risk put out there. And the way that they calculate the damage or the claim is to look at what you would call an oracle or a third-party source of data that says it's an agreed-upon standard that you look at. And then it says if the event happened, if it happened, then payout happens. There's zero adjusters. There's no friction on the claim. Payout just happens.
So you just said Ether Risk
That's
and Oracle.
Ether,
Tell us what.
Ether Risk is a startup.
Okay, so tell us a little bit about Ether Risk and kind of what they're doing then.
So they're a startup that has created this product called flight delay insurance. And it's literally that you buy your policy, which says if my flight is going to be delayed, I get paid X amount of money.
Okay.
And that's it. So it's literally that, pretty much that simple. And
Oh, wow.
And the Oracle piece of it is just the standard that you're using to decide if there's a delay.
Right, and when people say Oracle, that's a great way to describe it. It's just where you go for your source of truth.
Yep, it's your external data source.
Right, I like that even better because
Yep.
the word source of truth, it just sounds so weird. You know, external data source. Can I use that, Susan?
You absolutely, it's yours.
All right, good, thanks. Okay, so now what about derivatives and the way the insurance derivatives business works with blockchain?
So
Let's talk about that.
derivatives, investments, et cetera, when I was talking about the asset side, you get premiums in. What do you do with them? You invest them because you're known to need to be solvent, pay out, have a certain amount of capital, et cetera, all of those things. And so that's why I was saying that insurers operate pretty big asset manager businesses. And when you look at blockchain or on an enterprise side, everybody has been looking at insurance companies to support the risk side of the business. How are we going to modernize claims payout? How are we going to modernize insurance policies being placed? How are we going to work together on that? I'm going to say that from when I was interior to a large carrier, a lot of the use cases that were being explored also came from the asset management side. And I think it's kind of an interesting perspective because globally an insurer may have one CTO.
Okay.
And that CTO might be responsible then for the entire way that technology is used in the company. And yet they've got these distinct lines of business, risk and asset, in those, you can inform each other on the technology. It's kind of an interesting spot where if maybe on an emerging technology, the asset side is moving forward faster in testing and developing technology, the risk side might be able to learn from that as a global enterprise.
Interesting. I never thought about it that way, but I guess you're right. So you mentioned enterprise. You know, outside of the Star Trek fans who all know what an enterprise, what the enterprise is. I want you to talk a little bit about what enterprise is, because you hear people talk about enterprise solutions, and it always sounded, it rang odd in my ears because I'm a lawyer and I don't really delve into enterprise. So why don't you talk a little bit about what that can encompass too?
So when we would use this in a finance term, we would call it corporates. Which might be a more familiar term, but enterprise really is just commercial business in the sense that I'm using it. And from the experience that I've had, I've been embedded in the insurance industry for a period of time. So it's their enterprise software systems.
Okay, gotcha. All right. And tell me if this is right, because the way I think of enterprise is just the way that something is used. Is that generally speaking correct, or is it more specific?
I look at it as the way, so we look at business today. I'll take you back some. So when I was in business school, you had the management information system, and I know I'm dating myself to call it that, which was a separate segment of what you were trained in. And it was business upon which technology might be applied to manage things. I actually think it's the other way around today, in that most business is software driven, technology driven, and it's integrated into whatever the business is for a large part.
How was it before? Maybe I missed that.
Maybe your business model, you were putting on information systems to manage some kinds of processes or data, but you weren't actually starting from the ground up saying, I have data and processes and business is going to be surrounding it.
Gotcha. Okay. I'm following.
And I think that that's a generational shift too. So I look at this too, so sometimes when I'm talking to a C-suite and I kind of jokingly say, well, were you trained to use your iPhone by your kids? Because in a lot of cases that is the case. You're not necessarily so familiar with technology when you haven't been brought up in it, as opposed to somebody who's 20-something or even younger and going to enter the workforce who is extremely familiar with technology. The views are different in the way that software exists, in the way business exists. That's why you see businesses modernizing or going digital. And you see some companies sort of defining themselves as technology companies that do insurance, or technology companies that do banking, or whatever it is.
Gotcha.
I just think it's a kind of a shift in thinking, shift in view.
Interesting. Yeah, I guess you're right. You see, it's more obvious to me in the fintech world because there's a focus on technology, and it's a fairly branded world, and it's continuously developing, I should say. So I guess I see that, but I don't see it that much outside of the fintech world, which just could be that I'm generally ignorant of the things that are going on around me.
No, I think it really exists everywhere. Look at advertising, look at other supply chain, anything dealing with supply chain type things. I think it definitely exists everywhere.
Now, are there insurance products that you see coming out or that were being discussed that deal with the supply side? Because that strikes me as a fairly large industry. I mean, there used to be export letters of credit. I had Ron Quaranta on. We talked about that. That sounded like a terribly boring job to have. But that's an insurance product, right? And that's also shipping as well.
It's shipping. So there's a really interesting initiative called InsureWave, which is Maersk and E&Y and Guard Time. And it's hull insurance. So right now,
like the hull of a ship?
The hull of a ship.
The actual hulls are just being insured?
The hull, yeah, that's something that's insured.
Okay.
So
I would think the whole ship is being insured. Is that?
Well, but it's called hull insurance.
Okay.
So if you think about the possibility that if you're heading into an area that might be more dangerous, maybe you can have a dynamic premium as your cargo is going. Because you've got, this is powered by sensors, right? Relaying data.
Gotcha. Okay.
And so that's a possibility of an adjustable type of insurance that is only made possible by, I would say arguably by capturing that data and putting it somewhere, and blockchain is where it's being put.
Okay.
So
Yeah.
that's a concept of a new kind of product.
You don't need blockchain for that, though, right? I mean, you really don't.
I think it's probably a cleaner way to keep your data. From what I've seen, I mean, it'd be pretty hard to coordinate that across a lot of different kinds of databases, each one trying to talk to each other for each parts of the data that they're capturing. I think putting one kind of system in that can handle that in a way where you can trust the data coming from different spots might be a really good use of blockchain.
So in other words, in this case, blockchain would be the entity that converts all the different programs and turns them into one unified system?
Well, it's the host, yeah. It's a unified host, but you're not relying then, based on whoever's built this blockchain, assuming that it's a more decentralized version of it, you're not relying on one data host or data provider to create that.
Gotcha.
If a lot of people in the industry are creating this together, and that hasn't happened yet, because it's still in its initial form, but if a lot of the participants got together to create that, they'd all have an incentive to not have awful data, right? So they would all have an incentive to have this clean and trustworthy.
And I guess the benefit to that would be that everyone gets to have their own internal system, and as long as those systems can write up the basic outcome of location, for example, to the blockchain, that's all you need.
That's all you need, is exactly right. It's verifiable, and then you can write your risk based on that. So that's I think that's an interesting application of this. And I think it's also an application that shows that you can, once you have your secure data, then you can figure out new products to put on there or new ways to go about this, which wasn't really available before.
Okay, so before we get into the new products and the new data, I kind of want to understand a little bit more about how all these different things work. Not blockchain, because there are other podcasts you can go to if you want to learn about blockchain and what it is in general. But this is a little specific, right? So tell me the different examples of data that you have out there on, let's say, a ship that's going into the waters. What kind of insurance did you call this again?
Hull.
But it was a specific type of insurance product.
Marine hull insurance.
But it was marine hull insurance, and it was also, there was something relating to where it's located in the risk.
Oh, well, you're figuring out so when you're writing that insurance, how do you know where your ship is really the fundamental question, and what's happening to it.
Okay.
Right, so you can track that with geo-trackers. And you can post that data somewhere, and then you can try and but that data doesn't get relayed perhaps to your insurer to try and figure out if they're recalculating their risk, and you can answer whether this is good or bad. I mean, I'm just relaying that this is definitely something that's happening.
Okay, gotcha. So in other words, right now, is it a consortium that's trying to do this?
This is a combination of E&Y, Maersk, Guard Time, there's a broker on there, and other participants.
Feels like a consortium.
So it sort of goes to the point of this technology, meaning that this technology doesn't work with one or two parties per se. It works as a network. It creates a new kind of a marketplace. Gotcha.
Okay, so they're using. So blockchain looks like there's an enterprise solution for ship tracking, for example, right now.
Right.
What other kinds of ways? What other ways is blockchain being used in insurance for improving? For solutions, I guess.
For
network solutions.
So for production-wise, there isn't much that's in actual. Well, production is a term of art. Okay, so I come from a background of distributing technology before I got involved in insurance and in fintech and blockchain. And for me, production meant that there was a lot of adoption going on mainstream, and you were training people, and just kind of what you would think common variety word adoption means. People are using the product. In blockchain, it's new. It's a new product. It's innovative. The software is being developed. So I think production becomes more of a term of art in that you have these use cases that were tests. Now you have trials to see if this could really work. You're running a shadow system, exactly what you would want to do when you were putting new software in. But, quote, production, don't know if that actually exists yet. I think we're early. I wouldn't expect it to exist.
So essentially there's 3 stages to adoption, right? There's use case, there's, you call it a shadow model?
Well, whenever you're going to put some new technology in, you would shadow with your current system.
All right, so use case, shadow models.
Trials. Use case, trials.
Okay.
Trials with this, and then ultimately you would cut over and make that to be your full-on production system.
And production, right. Okay, so, I hear people talk about use cases all the time, and I'm not a business. I didn't get an MBA like you, I deal with legal issues, and I fight with people about what the legal concepts are and sometimes some facts. But when people talk about use case, maybe you can explain a little bit what that is, and then we can kind of compare that to production, because I think the trial is fairly obvious. Everyone knows what a trial is. But let's just talk about the difference maybe between a use case and a trial.
So use case is, can this work? Can we put together some people to test out whether this concept can work? Generally, they are short-term projects. They can go for a few months. They can test out certain parts of the concept. They're not full-out built systems.
Okay.
So they're kind of the rough and ready.
Mm-hmm.
You might think of it as sort of I don't want to get into trouble for using this, but almost the agile version of the way that this technology develops.
Okay.
And once you've proven out your concept, then you need to think, well, if I beef this up, does it really work? Because you're putting it out. A use case is really your minimum that you need to do to test something. So you don't have all your bells and whistles on there. You don't even know if it can scale.
Gotcha. So use case is the pared down version where you're essentially, it's like level 1 of a product, right?
Yep.
Then the trial is kind of like the beta. Is that so? It's pre-beta. Is that right?
It's pre-beta.
And then you got, I know what beta is, not just beta max. Did beta come from beta max? That would be funny. It was like it's the secondary version of it's the technology that no one uses anymore, so we're going to call it a beta. And then you have production, which is the final stage. So I get that there's not a lot of production for most blockchain things. I mean, outside of early...
That's correct. And I believe that that's exactly right for where you are in the innovation stage. If you look at the enterprise software that's being developed, be it Corda or Hyperledger or whatever the private chains are doing, they're young. And software, you're developing architecture that belongs to or is used by many. It's not a simple app. It's not I'm going to figure out where my doctor's appointments are. It's not a simple level of coding. So when you're putting all these parties together to get to an end, it takes a while to develop some really good software. And that's why I think we're exactly where we should be on this. And part of what I see and what I enjoy doing is sort of cheerleading this on, because the more development you get, the more purposeful testing you get, the more products you get, the more lines of code you get committed to this, the more you can actually find it to be useful. So I think there's a lot of value in that, and I think it's more of a long-term shot. It's what I would call patient capital on a lot of ways, and I don't think that we live in a world that has a lot of patient capital. Architecture's hard.
Have we ever, really?
I don't know. I do think that we did used to live in a world where R&D was a larger part of a lot of companies' budgets, and there were things that were more structures, financing structures might have been set up to encourage that. I think today things are very short-term oriented in general. If you look at, certainly if you're looking at innovation being funded, and that's coming through VC,
Right.
a lot of VCs are not what I would call patient capital. There's a few that are long-term looking, but for the most part, that's not their funding model. And I don't necessarily know that it should be their funding model, but it makes it difficult to then fund more long-term projects if you don't have that access to putting that financing together.
Okay, so, and I agree with you, by the way. I think that, even though I majored in blockchain when I graduated in the 90s, I was a really early adopter myself. We're far away, I mean, a lot of people like to talk about blockchain in real estate. I mean, we're so far away from really being able to use blockchain as a ledger source for owning real estate, which is really the best use for it. Like you said, we're in the first layers. I don't know what you really compare it to, but.
Well, maybe you're pre-DOS, but.
Right.
But all that being said, I am also bullish on the fact that there are definitely applications that could be used now, even in the more rudimentary form.
So what other insurance kind of products well, I don't want to limit it, but I know that you have a really deep insurance background, so I'd love to hear, outside of kind of the shipping tracking, are there other things that you're aware of that people are doing, or are there other parts of the insurance world that you think blockchain would be really great for, and we're just kind of too far away? We're at the pre-DOS stage, so we can't really start working a computer yet. Do you know what I mean?
So, I mean, the consortia that I was most recently with has a product that they expect to be ready for industry adoption January 1st, 2020. And it is a way to underwrite reinsurance.
Okay.
So, it takes contract placement. It uses the current parties, all of the insurers, reinsurers, and brokers, and essentially digitizes and creates a digital marketplace for what the processes are today, which in a lot of cases can be manual or paper-based.
What do you mean by the digital marketplace for the processes?
So you're placing your contract. You're deciding which percentages you want to cede, or somebody else pick up that risk. So,
what do you mean?
So today, when you're going to buy reinsurance, you go to a broker. Broker helps you decide.
Let's actually set forth what reinsurance is.
Reinsurance is the insurers who are taking on the risk of what the insurers have already taken. So I write a certain risk as an insurer. I then don't want to hold all that risk. I subcontract out, or I contract out a lot of that risk to different insurers to diversify it.
So it's like participating in a loan, essentially.
Well, it's not a loan, but yeah, participating in your.
Well, no, it's not a loan, but it's the same kind of concept. I lend money to you.
It's a participation. Yeah, it's a participation.
Okay.
And
how big is the reinsurance market?
I actually don't know the answer to
that.
Sorry, all I can tell you
wasn't
is,
trying to stump you. I'm just curious.
Nope. All I can tell you is that the world does not operate without insurance, and
Right.
insurance does not operate without reinsurance.
I did some research because I was going to be speaking at a conference on fraud, and I was like, let me look at the first fraud. And it was a boat insurance fraud in Greece by a guy named Hegasteros. And so that was, 3,000 years ago, something like that. All I could think of is, wow, I didn't realize insurance had been around as of ancient Greece. I mean, to me, that's amazing.
Insurance been around. You're talking about mutualized risk. In insurance, in a lot of ways, I view as a social good.
I hate social goods, by the way. I'm a libertarian. And I hate everything, right?
Okay.
That's just because I'm a lawyer. But all right, social good, you were saying.
So in terms
insurance.
of that, when you first had shipping insurance, when you would go and you would post how much you were willing to stake on a particular ship, that could be some of what you were referring to in ancient Greece. So that was probably, some of the beginnings of the way the industry sort of developed. But today, we take on risks that you wouldn't, well, let's put it this way. There's a price for every risk, but there isn't a buyer for every risk. So if you're going to look at...
That's a very good point.
Right. You're going to look at capital markets. You can price whatever risk you want. You may get more speculative, less speculative, depending on who you get. When you're looking at perhaps something like health insurance, there's a price for every risk. But does that mean that your most sick people who are in the most need of coverage won't get it because they can't afford it? That's where your concept of mutualizing the risk comes in, because it means as a social good, we're going to help out. And, you know, it's imperfect. Lots of legislation, lots of arguments all the way around about what systems you want. But I guess the bottom line is, do you want to cover those people? You know, I also am working with the concept idea of possibly adding insurance in sort of on the markets where people are most vulnerable. So this might be commercial insurance, where you have the equivalent of lending circles.
Mm-hmm.
And in those kinds of communities, they don't really have infrastructure. So if you could add in an insurance layer, you know, maybe those kinds of communities get knocked out by a flood, but the flood isn't Red Cross worthy, so you're not going to get huge disaster relief. It doesn't mean that the community itself wouldn't be wiped out, whereas something like business operation, business continuation insurance might be really helpful to them. And can you do that on a more micro level in combination to help build up some sustainable communities? So that's kind of an interesting concept.
It's actually a great idea, because when you look at the micro-lending community, which my understanding is, and I could be completely ignorant about this, so you'll correct me if I'm wrong, please, because, you know, I don't have my YouTube, I mean, not my YouTube, my Google app up right now. But my understanding is that these microloans in Africa in particular have really helped to drive the economy.
Mm-hmm.
And you're getting, I don't know if they're particularly high interest rate, but I know they're not low interest rate loans. They're not secured because they're in, you know, rural Africa, for example, but they're enabling people to have businesses. It's really no different with insurance when you think about it, right? And you kind of referenced this when you talked about insurance as risk and insurance as asset, which maybe we could talk about as this, but you get paid on a policy, and so it's really effectively like a loan that can get called. So it's
contingent liability, yeah.
Right, and it gets called if an event happens, and so you're paying up at the end, not at the beginning, but you're getting your premium. So it is an investment. I mean, it's an investment product, right? If you look at it from the other side. So there's no reason why you couldn't do something like that. I think it's an awesome idea.
Yeah.
I mean, it's like, I think you should start a nonprofit and just do that right there. You can have insurance risk pools, you know, in really any poor community. I mean, it would work great. That doesn't have insurance, right? Why not?
If somebody is willing to fund that, I would start that.
We should do this, Susan.
I mean, because this is the layer that helps sustainability. And ultimately, sustainability promotes a good economy and stability.
Absolutely.
So I don't think that there's a downside. I think the reason it might not have been done is we have systems that are really expensive to maintain that don't allow for such small targets to actually be insured. But maybe today, going back to sort of distributed type systems, maybe we can do better with that and track it better.
I never thought about that, but you're right. Why couldn't, I mean, if once you have the layers down for blockchain, you could use that. Mm-hmm. You could use it as the network so that it's scalable on a lower end, right?
Right.
That's a great idea.
Hey, I'm literally making the appeal. I'm up for that. If there is somebody who would like to do that, I am extremely interested, and I can put together the right people who I've been talking to about this.
Okay, so, why don't you tell everyone what your Twitter account is so they can DM you, right? We'll put it in at the end.
You can put it at the end.
But what is it?
I think it's at Susan Joseph 1786.
Okay.
And you can find me on LinkedIn too.
All right, there you go. Okay, excellent. All right, so let's see. So let's go to the board. Enterprise and crypto. Well, actually, no. Let's talk about insurance as an asset, and then we could talk about the crypto winter and how you think it's affecting all of these things. How does that sound?
Well, so crypto winter, we all know, means that investment in a lot of ways has slowed. Crazy investment, but also, I would argue, interesting investment, because a lot of money was flowing in during the whole ICO
Boom.
whatever word you want to use towards it.
ICOs are booming.
And
Boom.
there was a lot of activity.
Right.
Some of it was a little bit outlandish, in my view.
Some of it, I think there was an app for dog poop.
Okay.
Not an app. I think there was.
All right, listen. But the thing is that, if you're funding ideas, which essentially was what it was, sometimes you get good ideas.
It's true. There was a lot of creativity that you saw.
And that is interesting. That was an interesting phenomenon. And, for whatever reason, we don't have those ideas exactly funded anymore, which is fine. But what we are seeing is that people are, quote, getting serious about ideas that might actually work. And that to me is interesting, because maybe that's how we move forward on this.
Did you go through? I needed a crypto detox back 2-3 months ago. There was one point I opened up my LinkedIn account and I just flipped through, and it was everyone with an idea about something and how they were doing this in crypto, and I'm like, oh, I can't handle it. I was recently at a conference in Israel, and I stopped over to see a friend of mine over there that's in the space, who I met, doing all the things that you and I do, go to conferences and all that. And she was like, yeah, I just came back. I was abroad. I needed I think she called it a crypto detox, because she's really deep into the crypto stuff. And I was like, yeah, I know what you mean. I was gonna actually do it. We were gonna do a podcast, but when I heard that she was away for 2 weeks detoxing, I'm like, I'm not gonna do that to you. So you got a free pass. But I feel like there was, every now and again when I think about all those crazy ideas that you were talking about, I'm like, I get the heebie-jeebies. I'm like, God, just get it off of me.
Well, the problem was,
did you do that? When did you go through your detox? Tell me. Or are you still doing
maybe
it?
I'm still going through it.
You shouldn't be on this podcast then.
But what the interesting thing is, I actually really believe in this technology and in the potential for it. So I like that there are still a lot of very thoughtful people in this. We joke about crypto Twitter, but at any given time you can go on Twitter and talk to some very thoughtful people about this. And it's a spot where it's not just the lawyers talking, but it's the lawyers plus the finance guys plus the technologists talking. Yeah. And they tend, in a lot of times, in the best situations, they talk to each other and not at each other. They don't really know, when you're developing a technology that has such a far reach in all of those areas, those conversations have to happen, but I don't know where else they happen.
I think you're right. One of the things I really enjoy about this industry, and it's also what drew me to the bankruptcy industry, it was, the crossroads of two different things that I really liked, right? Bankruptcy, it was law and business and trying to get stuff unstuck, right? Those three things were really fun. And what I love about the fintech industry is it's kind of the same thing, but it's more of the unsticking is from a technological perspective. And I really do like the cross-pollination of ideas and industries. I find it to be, when it's pure and it's not just people talking about ridiculous projects that are ridiculous, then I really love it. And I also, I feel like it's kind of pulled back a little bit, I'm sure it's part of the crypto winter, but there's less noise in the industry, and it's somewhat refreshing, and I'm seeing better ideas rise up to the top.
That's
right?
What I was saying, is that now the real stuff that might actually work is being experimented and tested upon, and maybe that's because you don't have X amount of money to throw around at just any old idea, so you really have to think about the ones that you might want to bring to life.
Right.
And maybe also you're sort of understanding too that an idea isn't enough. It's an idea plus application plus scaling, and you need some hard work behind it, and there's no substitute for it.
I don't know a damn thing that's ever been worthwhile that hasn't taken years of effort on my part from a learning perspective for you to be good at and get something worthwhile out of it. everything I've ever done that's been worthwhile has been really, really, really hard. And I've given up a ton for it. And maybe that's what bothered me so much when I opened up my LinkedIn account. That I don't remember, it might have been 4 months. It was in the last 6 months.
It was a little crazy.
Do you know, did you see that
it was
too?
a little crazy.
Because we're connected in all the same
Yep.
circles. And you and I have known each other I think we've known each other for almost a decade,
Yep.
it feels like. It's about a decade. So from different lives, we've known each other. And it literally drove me nuts. And I think that's what it was. Now that we're talking about it, it was that you clearly did not become an expert. You could not have graduated in the 90s with a degree in blockchain, right? So
Nope.
Why does it seem like everyone was? And I like that. I like it when people like you that you work. I've known you for a while. You work really, really hard. And that's why you've always been successful, because you don't stop. I mean, when we had cases together, you're like, this is going to happen. And I would say to you, Susan, I'm just telling you, I will do whatever you say, right? You're my boss here, right? But I'm your lawyer. You get to tell me what to do here, but that's never going to happen. And then it would happen. And it happened, I don't know how many times. I would just laugh after a while. But it was because you worked. You would dig deep into documents and figure stuff out. And then we'd bring it up and it was like, boom, another boom.
So I want to throw a point out to you, though, because in all seriousness, I have to wonder about this. And while I agree with the whole securities, let's not raise money and rip people off kind of ethos, I'm totally for following the right regulatory regime.
I'm not. I try to rip people off all the time.
Well, but think about how easy it was to raise capital, to put an idea out there. And think about the fact that the people who don't normally have access to capital might have had an opportunity to raise capital in an easier fashion. And maybe the takeaway lesson is, can we figure out ways to raise capital that fit within a decent regulatory scheme where those who normally don't have the ability to raise capital can? Because that, to me, is a big access point and a big growth potential for the economy if you can figure out businesses can get access to that.
I have just one thing to say to that. Dude, that's true. I mean, look, for some reason that concept is now on the Republican libertarian side, right? But it's a really good point. I don't really think it's Republican or libertarian. I think it's just you should. I was at a conference. I was talking on a panel. I was moderating it. These guys were way smarter than me. These guys, so I shouldn't have been speaking, and I wasn't. And one of them said they're on the business side, and they had a fund of or something relating to investments in the crypto industry, and they said, look, the whole concept of an accredited investor is upside down because it's based on money, not based on knowledge, and It opened up another door. It was like when I heard blockchain and I heard what it did, I was like you said, it was like boom. There were all these explosions of how it's going to affect the world. So all I could think of is he's really right, because it should be based upon your knowledge and it should also be based upon your risk appetite. So there's no reason that you couldn't put in X amount of dollars. If you want to peg it to income so that people aren't losing their shirts, I guess you could do that, but there's no reason why we don't have different criteria for people to invest, and that's fine. Look, I went out and I when the prices were going down, I bought some cryptocurrency because I thought they weren't going to go down more, and guess what? They went down more, but I was fine because, first of all, I've always been a terrible investor, right? So, and I knew that, so I did a small amount, and I did it because there were other benefits that I saw to doing that at the time. And I wasn't looking to turn a quick profit, right? So, but that's a perfect example, right? There's no reason why we can't have some form of criteria that's different from this accredited investor nonsense, where you can have people that want to participate outside of the Oculus, crowdfund, where you get an Oculus and you don't get don't get a percentage of the improvement. Why shouldn't people that are non-accredited, normal people that don't know anything about investment, like me, why shouldn't we be able to do that?
Well, right? That and how are you not getting good ideas to the marketplace? How are you not then fueling business local economies. I just think that there's a missing piece there. I know there was some attention to address it, but the thing that I take away from the crypto explosion, besides the fact that there was a lot of people trying to scam people, which I don't like at all and puts a bad name on all of this, is that certain ease to raising capital, that there needs to be some recognition that there is a segment of the population who can't raise capital, who might need to raise capital, and they don't want a handout per se. They want a mechanism that helps them do business.
I mean, I guess, you would say, people would say, well, Reg CF, the crowdfunding regulation, allows you to do that. But it hasn't worked.
So that's kind of where I'm going, is that there's been attempts made. But for me, the stark reality was, if you had an idea, you could get it funded if you knew how to market it. Now, it was done bare bones and not correctly, in my view. So I'm not here advocating the ICOs.
Right.
But I'm advocating that we can learn something from that, is that there's an appetite for people who need capital and need a better way to get at it.
I put down $1 million in Pumpy Coin. The SEC wouldn't take my money, though. That was that the name of that? Was Pumpy Coin, right? Wasn't that like their fake cryptocurrency scam? That was great. That was just so smart. I mean, yep. The intelligence and the humor that went into that,
yep.
Was really just wonderful. All right, so let me see. Why don't we talk about the big scary thing, diversity.
Okay.
Let's talk about it, Susan. You ready? All right. So why don't you tell us about what's the name of it again? It's
Diversity in Blockchain.
Diversity in Blockchain Inc. Right. So
yep.
Let's talk about your nonprofit. And I'm somewhat on the fence about diversity. I find that it's generally being used the wrong way and it does the wrong thing. But I'm not against it, although I think it'll be an interesting counterpoint. So let's hear about your nonprofit, what you're doing, the thought behind it, and we can talk about it in general. So remember, this is unedited, so we'll be very, very careful here, right?
So Diversity in Blockchain started from a panel at MIT, which was a Women in Blockchain and AI panel.
Okay.
And literally at the end of the panel, we were asked to please save us from ourselves. That was the plea. We will incubate you. So that is the genesis of this. So we came back and said, okay, we had some conversation among ourselves, decided if we wanted to organize. And we discussed that there are a lot of, per se, women's groups out there, but that blockchain itself and its promise of peer-to-peer really is needs diversity of thought. And so the idea is that you are encouraging diversity of thought and diversity of participants. So that was kind of the thought behind why we went in that direction.
Mm-hmm.
And I don't believe that, I don't have statistics one way or the other. We're looking to put together a study to put the benchmarks in for what diversity is in this industry. It's a new industry. So we don't have the benchmarks before, but, from experientially speaking, from being on lots and lots of panels and around this audience a lot, I don't believe that there is a lot of diversity. I believe there's a pretty big echo chamber, and I think things will work better when there are diverse participants and diverse thought.
All right, so there's a whole bunch of stuff that we can talk about there, because I do agree. I think that diversity of thought matters. I don't think that, and if you actually don't think there's a difference between people based upon the way that they look, which I don't believe, then really the most important thing is diversity of thought and not diversity of physical diversity, because I believe that there's not a significant difference between people based upon race and the way that they think. I think it's just the way that they think is what matters, and you take it on an individual level. But before we get there, and we'll get there, all right, no problem here, okay? When I look at the people that have some of the biggest voices here, nearly all of the ones that come off right off the bat are women. I mean, I see a lot of it, and I'm not in an echo chamber. Well, I am in an echo chamber because it's LinkedIn, right? It's who I know on LinkedIn.
Right.
But there are some tremendously prominent people in the blockchain space, from my mind, that are women, and I hear more about them than I hear about men in blockchain. So I would counter that. From my perspective, there seems to be a lot of very active, well-publicized, and appreciated women in the space. Do you disagree?
I would say that there are definitely some, but if you looked, there was a survey that was just published, I think this week, where only a few women were on it out of 100 of talking about voices in crypto, voices in blockchain. I mean, regularly, though those women might be
that was that 100 in blockchain people.
Yep.
There were a bunch of women on there. But I don't know what the numbers were.
It was a small percentage, and they even wrote in the introduction that, that they want to try and help fix that in the industry. That this is what they came up with. I don't know what their criteria are.
Right. We don't know what their criteria is for it.
But experientially speaking, there are women in this industry who are very strong, but there's an overwhelming amount of men, and I wouldn't say that there's an overwhelming amount of, I don't know how to be politically correct here, but just an overwhelming amount of diverse men either. So in the end, if you end up getting people who sort of all are brought up the same way and think the same way, you're only going to get a certain set of results.
So I'll tell you that I disagree. It's not about how you're brought up, it's about how you think. And if you look at the big 5 personality characteristics, that's actually, you're born that way, and it's not based upon how you've grown up. So that's why you can have Alex P. Keaton, right, who is this conservative kid, and his father was this, ridiculously liberal person. That's why you can also have things like Archie Bunker and Meathead, right? So I hear what you're saying, and it feels like there's truth to it, but I know from significant scientific observation, like the Big 5, that the diversity of thought does not come from what you look like or where you are. You're just made that way, and it's 50-50 split. 50% of the people are gonna list towards the conservative side, and there are specific attributes for conservative, not political conservative, like lawyer conservative, people that non-entrepreneur conservative, managers, right? So that's a big distinction between someone that is conservative from a personality perspective and not. It's the artist versus the manager. You need artists to start corporations, which is why Silicon Valley has so many. It's so liberal because it's very entrepreneurial, and that calls people that list towards the liberal side versus the conservative side from a personality trait. So a lot of when you dig a little bit deeper, I think that there are differences, and those things are more important. I personally don't think it's the way you look. I think that to a certain extent it's a lot smaller than it is. What I actually would like, the statistics that I would like to see is there is a generational shift. Right now, the people that are going to college, majority women. The men are dropping out or not going to college at staggeringly large rates. And I haven't dug into the statistics on it. I've tried, but it's just hard to get. I don't really know it. So I think that you also need to break it up by age bracket. So maybe the 40 to 60 will be one range, and then the 30 to 40 and then the 30 to 20 might be different. I'd be interested to see, because I think that there are some changes that are happening there, but I don't really know.
So I don't know those statistics in particular. I do know if you look at engineering school statistics, you're still mostly at about a 30% population for women. So if you're going to consistently have less participants, you're going to have consistently less graduating in, and consistently less who are going to be moving up, and consistently less who are going to be sponsoring in higher levels. So the system self-perpetuates on that.
See, and what I would challenge that thought, and go ahead. What are you
so
gonna say?
When you look at the way law schools were, my first boss, way long time ago, when she graduated from law school, the only jobs available to her were secretarial jobs, not practicing lawyer jobs. She ultimately made her way up as a partner eventually. But when she went to law school, I don't know how many years ago, it was well under 50% of the women in law school classes. And, you know, the opportunities there didn't exist. By the time I got to law school, it was closer to a 50% ratio. So,
Right.
and opportunities for women increased. I was able to practice law right out of school. She wasn't. So I would say that there's definitely something to numbers on that.
Right.
And you can look at other industries to take that and say, listen, it happened that way in another industry. This makes sense.
And you know what I would say about the engineering thing, because I agree with you on all those levels. There's a book that I need to actually read because I find it to be fascinating. But I think it's called the Scandinavian Gender Paradox. And if you look at Scandinavia, they are the most liberal, and they really pushed the equality between men and women for years. And they had a history of it going back to the Vikings. I think the women were warriors under Viking times. So it's been there for a very long time in that culture to begin with. And they really did push it. And what they found is that the more freedom the participants had, the larger the divide went between who would go into your typical sciences, subjects that focus on things or professions that focus on things, which is like engineering, versus professions that would focus on people. And that's the trait characteristic divide from a psychological perspective between men and women. It's about a 60-40 split. So 60% of men are going to be more interested in things, but 40% of women will typically be more interested in things than people. If you look at it from this is not me saying it. These are people that have really looked into this. So I wonder how much that difference is. Now, maybe it should be more of a 60-40 versus a 30%, but we should also be open to there being truth in that as well, that you're going to have more men being interested in engineering, and therefore it will perpetuate itself. And if that's the case, and if that's truly what it is, then there's nothing to really be remedied about. So I'm glad.
Couple of things on that. One, I haven't read the book.
Me neither.
Two, we're talking about access points, so getting access. And three, if you look at what's going on in software engineering, if you look at creating databases, if you look at machine learning, if you look at the things that are coming, I would argue that it's not a thing, and that the skill set required in engineering might be shifting to have a meld of both of those, and that access points really matter here. I don't want my Apple Watch designed to not accommodate my female cycle. I don't want my Tesla car to be designed to not recognize somebody of another race, which initially they were. Those sorts.
What do you mean? What do you mean?
Meaning that the recognition factor there did not take into account somebody who was not white initially on the AI side.
I don't understand. Can you explain that?
On the automatic driving piece of it, what it was looking at when it was recognizing an object, wasn't recognizing an object that wasn't a white person initially. I don't want
I hadn't heard that. Okay.
It's documented. I mean, it was brought up to us in a diversity seminar that we did at Cleveland.
I mean,
by somebody who is a Tesla driver. But
I'm not challenging it. But although I would say this, right? I find that fairly surprising thing to hear, but it could be true. I also hear all sorts of crazy stuff that turn out to not be true when you dig in. I'm not saying that's yes or no. I mean,
well,
I would just be really surprised if that was the case.
Bottom line is
I am surprised. That's all.
Your bottom line is you're training on a data set,
Mm-hmm.
and you're looking at sets of logic, and you're looking at things that require perhaps an understanding of empathy and history. I mean,
empathy and history for data sets. What do you mean?
In creating the way that you're creating your data and the way that you're doing your data analytics.
Mm-hmm.
I think that there's a crossover there. So maybe what they might have been measuring is not necessarily predictive of what needs to be happening in the future as these skill sets cross.
Oh, I agree. And by the way, I think that everyone should have the same opportunities. It's just that you can't be adjusting outcomes.
We're talking about access points, right?
And
so the
so
access
you and I
points
agree on
have
that.
people have to be able to have access,
Right.
and a lot of times they don't. And there's some structural things in there that perhaps you walk into a room and you're the only woman in a room full of 40 men trying to learn something, and that feels intimidating to you. And so maybe you leave if you feel uncomfortable, and maybe.
I mean, there's only.
Why?
I don't agree with that as a basis for it. I understand if that happens, and it shouldn't happen, but I mean.
But it does happen. So the thing is, you can argue that you don't agree with it, but I'm going to tell you for sure. I mean, we have heard this over and over.
I'm not saying it doesn't happen. I'm saying because people don't feel comfortable if there's an overwhelming presence of the opposite sex, I don't know that that's a reason to adjust for certain things. That's what I'm saying. Like, I'm not comfortable being around a room of 40 women being the only man there. That's my problem. I don't know, and then
no, I don't agree with
then
that.
how else do you adjust for that? I mean, so what do you do? So then you force other people to go into a class?
No, what you do is then you create that kind of class accessibility where people are going to feel comfortable in it. So maybe you create that accessibility, and then they.
What does that mean, that
comfortable.
accessibility?
So maybe you create a class that targets, for instance, if we're talking about women, you create a class that targets a group of women engineers or a group of women accountants or whatever.
I guess it depends on how you do it, right?
And so you, at that point, they don't feel intimidated, so they're going to learn. So maybe you do that.
I mean, look,
I'm
I
just
can
using
tell
that
you.
as an example.
I mean, I can tell you this, that right now there's a giant push for people, for all kids, for science. They call it STEM.
Mm-hmm.
Wasn't called STEM when I was growing up. But I mean, if you said to me, "Hey, Jason, we want to make you an engineer," I would rather pluck my eyes out every day. I don't have that interest. So I totally understand if someone doesn't want to be an engineer. I would have been the worst engineer on the planet. I mean, I think I botched my Regents exam in physics only because when I looked at the ruler, I realized I wasn't sure which one was inches and centimeters, and I couldn't figure it out the right way, so I used centimeters for inches, and so literally it was the drawing section that ruined it for me. So I can't do anything when it comes to those. So I get it.
Right.
I hear what you're saying.
But nobody wants.
And I think it's an important conversation to have, either way.
Nobody wants to force anybody in there, but you also want to make access not available and you don't want there to be an intimidating environment so that people don't go into it. Because in the end result, for that hypothetical example where the person walks out of the room, that person loses, but so do the people in the room, because that diverse viewpoint that person might have brought, that different viewpoint isn't now made available.
Assuming that they actually had a different viewpoint. I agree. I mean, look, I think that you want to make sure that there needs to be a comfortable environment for everyone, but if I walked into a math class, every time I did, I always felt uncomfortable, Susan. Every time. When I was in college, I was like, I had to take calculus class, and I was like, I hated the damn building. It was in the math building. I was like, I don't even like this building, but listen, I'm glad to be having this conversation, and I'm glad to be having it with you because I know you. I know that you're not radical or crazy, and hopefully you know that I'm not radical or crazy. But it is an important thing to do, because right now it feels like no one knows what to do with any of these things, and you end up with a whole bunch of people pointing fingers at each other because you can't have an open conversation.
Right.
And that's actually one of the things I want to have. That's like one of the purposes of this podcast, is to be able to talk about things even like diversity. I try to keep us focused on fintech and blockchain, or at least business, but that's the purpose. Because there isn't a place where you can do that. Try to go on Twitter. Right? You go on Twitter, you say anything, you get 50% of the people that'll yell at you one way, and then the other 50% will stop following you. Right? So, anyway.
You don't know where your next genius is going to come from, and your next big business is going to come from, and so access is really, really important. So diversity in blockchain itself focuses its mission on education, on creating some kind of inclusive environment so that people can learn. And we're looking to set industry best practices by setting up some statistics to see where diversity is and to see what needs to be moved along to make better voice that's not an echo chamber. Because you've got a small amount of people who are working on this now, right? You're in the beginning of this industry.
I think the entire industry is an echo chamber right now.
It is. And so it will benefit by having more voices.
I agree.
So that's really that's where we stand.
I look forward to seeing what you're doing on that. So we're probably I think we're just about over an hour. So what we're going to get to is the last question, which is a couple of quick questions for you, which is as follows. You could say, I don't know right now. I really should have asked you this in advance, but let's hear your biggest business lesson. If you had to, you could have a couple, right? Or the biggest mistake that you learned from.
So I think the biggest lesson, it's really more of a life lesson, is to listen and to understand that things come at you from different places and that there's a lot of value in that. So bad experiences, or what you might consider bad, businesses failing, some mistakes made, something can always be learned from that.
I like it. Right on. I'm with you. I mean, right, the hardest lessons I've ever learned have been the best from a knowledge perspective. Mm-hmm. So I'm with you. All right. Okay, great. So let's round it up now. So we've got your diversity initiative. It is, hold on. Say it again.
Diversity in blockchain.
Diversity in blockchain, right? Yeah. So we'll look for that. We'll look to see what you have going, and I will be very happy to follow it and to have a voice in that as well. If
we welcome all the voices.
I know you do.
It's diverse, right?
Listen, we're friends, so exactly. I agree. And let's have your Twitter, let's have your email, let's have your website, whatever you want to give so everyone know. We can put it in the notes too, and then we'll take everyone out.
Okay. So my Twitter is at Susan Joseph 1786. My email is susan.joseph1786@gmail.com, and my LinkedIn is Susan Joseph.
Okay, all right. Thank you for coming on the podcast, Susan.
Thank you.
Well, it's been 5 long years of this permanent midnight. I've been waiting for the sun to rise. I've been standing all alone by myself in this darkness. Man, I'm gonna lose my mind. And after 5 long years without any sunlight, I figured out how to play this game. Forget about the moon, the stars, and the sunlight. You're gonna get to know my name. Come on and tell me. He's quite gorgeous. She's quite gorgeous.